In a world run by money, Bitcoin emerged as a promise, like a whisper of freedom, in a system designed to control. They say, Bitcoin will free you from all constraints, free from banks, free from governments, free from the forces holding financial power. Escape from a system that endlessly prints money, where the poor are drowned in inflation, while the rich swim in liquidity. But history always reminds us that freedom is never free. Because when you remove rules, the referees and regulator, what remains is not paradise but chaos, disguised as opportunity. To understand Bitcoin, you have to go back to 2008, a year when global trust almost collapsed. The financial crisis exposed the entire system as a machine running on fraud, leverage, and illusion. When Lehman Brothers fell, the world realized those in power actually controlled nothing. And worse, they were accountable for nothing at all. Central banks printed trillions of dollars to bail out the institutions that caused the disaster, while ordinary people lost their homes, their jobs, and their savings. It was a moment of collective disillusionment, proof that financial order was never built on stability, but on fragile trust. And while the world was falling into chaos, on a small mailing list of computer scientists, someone named Satoshi Nakamoto posted a 9-page white paper. It was titled Bitcoin, a peer-to-peer electronic cash system. The idea was revolutionary and deeply political. A currency without a state behind it, where transactions are verified by cryptography instead of banks. Its supply is permanently capped at 21 million coins. No central authority, no inflation, no intervention. The system is designed to operate transparently, openly, and tamper-proof. Every transaction is recorded in a public ledger called the blockchain, a financial history that cannot be altered or rewritten. It is the perfect answer to the mistakes of 2000. A monetary rebellion, wrapped in mathematics. In 2009, the first block was mined, called the Genesis block. Satoshi left a message. The time 03 on 2009 was not just a time on the brink of second bailout for banks, but a challenge to the system. But what does mining actually mean? In the Bitcoin world, mining is not digging for minerals. It is solving complex cryptographic puzzles. Whenever a miner's computer solves a puzzle, it adds a new block to the chain and receives a reward of newly minted Bitcoins. This is how the network exists and operates, with thousands of computers competing to verify and secure every transaction without any central authority. No government, no bank, just mathematics. The first believers joined the movement, starting with individualist libertarians. Mining is not digging or extracting minerals, but solving extremely complex cryptographic puzzles. Whenever a miner's computer solves a puzzle, it adds a new block of transactions to the blockchain and receives a reward in newly minted Bitcoins. This is how the network exists and operates, with thousands of computers competing to verify and secure each transaction without a central authority. No government, no banks. Only mathematics. The first believers joined the movement, from individualist libertarians to programmers, economists, and anyone who believed that money should be freed from political hands. They traded on small online forums, sending Bitcoins worth only a few cents. One of them, Laszlo Hanyecz, made the first real-world purchase by buying 2 pizzas with 10,000 Bitcoins. At today's value, those Bitcoins are worth over $6 million, making it the most expensive meal in history. But soon after, the idea of a currency not tied to any nation clashed violently with human nature. By 2013, Bitcoin's price had exploded from underwater to over $1,000. Speculators flooded the market, and exchanges like Mt. quickly became billion-dollar markets almost overnight. And as usual, the dream began to crash. In 2014, Mt. collapsed. After 80,000 Bitcoins vanished, $450 million, there was no one to sue. Digital gold disappeared. No regulators, no refunds, no escape. The blockchain recorded every stolen Bitcoin publicly, but none were recovered. The technology works perfectly. Humans fail. That is Bitcoin's paradox. It removes intermediaries, but also the mediators. When something goes wrong, there's no authority to turn to. Every transaction is final. Every mistake is permanent. And as the crypto world exploded, scams increased exponentially. Fake wallets, Ponzi tokens, pump and dump schemes, all riding on Bitcoin's reputation, but built on a fragile foundation. In 2022 alone, crypto users lost over $3.8 billion to hacks and scams, the highest recorded at that time. Even if you can trace the stolen funds via blockchain transparency, recovering them is nearly impossible. Wallet addresses are visible, but owners are not. Hardware wallets like Ledger or Trezor are safer, but not foolproof. They protect against hackers, not scams. Once you voluntarily send money to a scammer, even a hardware wallet cannot save you. This is the price Bitcoin forces you to pay. Either freedom or protection. You cannot have both. Bitcoin promises freedom from centralized control, and it delivers. But at the same time, it removes the safety nets ordinary investors rely on. No refunds, no customer service, no undo button. You own your money and all the mistakes that come with it. Yet people continue to trust it because Bitcoin is more than an ideology, a rebellion against the old order. And in that difference lies the whole story of a stateless currency. For freedom without limits cannot last forever. In 2021, one nation decided to make the Bitcoin dream law. El Salvador, a small Central American country, long dependent on the US dollar and remittances, declared Bitcoin legal tender. Young President Nayib Bukele called it a revolution. For the first time in history, a country adopted a currency not controlled by any state, a digital choice, replacing the traditional financial system that had left millions behind. For a long time, the country depended on the US dollar and remittances. It declared that Bitcoin would become legal tender. Young President Nayib Bukele called it a revolution. For the first time in history, a country adopted a currency that belongs to no state, a digital option, to replace the financial system that had left millions behind. The world called him reckless, but he called it initial freedom. Everything looked like a victory. The government created a national wallet app called Chivo, giving $30 in Bitcoin to every citizen who downloaded the app and installed Bitcoin ATMs across the country. The streets near El Tunco later became known as Bitcoin Beach, symbolizing financial innovation. Tech influencers called Bukele the so president. In that moment, it felt like a new era had begun. But the experiment soon hit a wall. The reality, most Salvadorans did not want to use a volatile asset for daily necessities. They just wanted stability. In 2022, when Bitcoin's price dropped over 60, the government's Bitcoin holdings lost half their book value. Protests erupted in the capital, San Salvador. People complained about technical glitches, fraud, and frozen wallets. The International Monetary Fund warned that adopting Bitcoin could destabilize the national finances and disrupt international loans. By 2020, the results were both positive and negative, but thought-provoking. El Salvador officially holds around 640 Bitcoins, worth approximately $740 million. At current prices, equivalent to on-paper gains of nearly $443 million after the recent price surge. The government proudly announced this figure. But the reality is far more complex. According to a central bank survey, only about 8% of Salvadorans use Bitcoin regularly. The rest remain loyal to the dollar. In a new $1.4 billion deal with the IMF, Bukele's government quietly agreed to make a Bitcoin adoption rather than mandatory. The law remains, but enthusiasm has dropped sharply. International creditors imposed limits on further government. The National Bitcoin Office still quietly buys small amounts through state-linked organizations. So the Bitcoin economy still exists, mainly relying on tourism. But ordinary citizens are more cautious than ever. For them, Bitcoin brings confusion. Their salaries rather than free dollars. Debts are in dollars. Savings are still cash. Bitcoin at this stage is just a side stage, not the main character. And despite many shortcomings, the story in El Salvador revealed an important truth. Bitcoin cannot replace the financial system because it is not a system itself. It is just a technology. Bitcoin operates very efficiently for those who are knowledgeable and disciplined, but as a national currency, it exposes the very problem it aimed to solve. That is inequality. The wealthy and tech-savvy gain new ways to move money abroad, while the poor are simply told to download an app that barely works. What El Salvador discovered is that a stateless currency still needs a state to establish trust. Without regulation, adoption falls into chaos. And chaos always has a cost. While El Salvador's experiment took place in the real world, online, a new digital elite was quietly shaping the government's future. Whales. Whales are those who hold large amounts. Not governments, but whales. Whales are those who hold the largest amounts of Bitcoin, with wallets containing thousands, even tens of thousands of coins. By 2020, about 1% of all Bitcoin addresses control more than half of the total supply. This means only a small group of individuals or organizations can significantly influence the price of an asset that is supposedly decentralized. When a whale moves just 10,000 Bitcoins, equivalent to about $6 million at current prices, that transaction can send the global market plummeting or soaring. Some of these wallets belong to exchanges, others to anonymous entities. No one is accountable. In traditional finance, Such influence would surely trigger warnings. Regulators like the SEC or FC closely monitor insider trading, market manipulation, and suspicious coordinated actions. If a director buys stock just before good news is announced, that's insider trading. If a hedge fund spreads false rumors to drive the price down, that's market manipulation. Both can lead to prison. But with Bitcoin, there are no such rules. No reporting required, no disclosure standards, and no penalties. If a whale dumps Bitcoin on one exchange to cause panic, then quietly buys back cheaper on another, it's just a strategy. And insider play, even more common than that. Exchange employees know which coins will be listed and trade ahead of the market, while developers leak information about upcoming updates. Private groups coordinate pumps and dumps, all planned through encrypted chats. In regulated markets, these actions would be criminal conspiracies. But in crypto, it's just daily life. This is the paradox at the heart of Bitcoin. Bitcoin was created to eliminate human corruption. But humans built everything around it, and they quickly learned how to bend the rules. Because in reality, there are no rules. Bitcoin cannot be manipulated by governments, but it can be, and is being manipulated, by those with enough capital to move the market. That's not decentralization. It's just a new elite, equipped with better technology. In the stock market, we fear insider trading because it undermines fairness. In Bitcoin, it's called early adoption. But the result is the same. Power is centralized, and latecomers pay the price. By 2025, Bitcoin's code remains intact and pure, but its market does not. And that difference matters. With no referee, every player becomes the judge, the overseer, and the victim of themselves. By 2025, Bitcoin has become both legend and mirror. A legend of digital freedom, and a reflection, revealing every flaw in human greed. After years of volatility, Bitcoin prices surged again, fueling a new crypto frenzy that shook the world. Exchanges were bustling. Politicians posted images of laser eye as a symbol of encouragement, and the familiar phrase resurfaced, "This time it's different." But history never changes. It only dons a new skin. When Donald Trump returned to the White House in 2025, he declared that the United States would become the crypto capital of the world. He called regulations a form of socialism and signed executive orders to remove rules governing assets that had been issued under the previous administration. The White House even released NFTs to fund political projects, blurring the line between governance and profiteering. The crypto market then exploded. Billions of dollars flowed into projects overnight. Some projects were truly innovative. Others were scams dressed in trendy outfits. It's the same story. Freedom sold as opportunity. Speculation packaged as revolution. Because when there's no regulation, lawlessness always disguises itself as freedom. That's the paradox Bitcoin has never escaped. It was created to free money from control. And it did. But what followed was not equality, but a world where every investor bears full responsibility, where everyone is their own bank, where every mistake is permanent, and every loss is irrecoverable. In traditional finance, there are regulators, courts, deposit insurance, and laws against market manipulation. If your bank fails, the government can intervene. If a director trades on insider information, they can go to jail. If someone steals your money, there's still a chance to reclaim it. In Bitcoin, there's none of that. The blockchain only records the truth, not justice. It's fully transparent yet entirely accountability free. You can trace where stolen Bitcoin goes, follow it to the scammer's wallet, track it through mixers and various exchanges, but you still cannot recover it. The ledger is honest, but the world around it is not. And that's what makes Bitcoin haunting. Not faulty technology, but human nature not running on code. The community often responds with a familiar saying, keep coins in cold storage and use hardware wallets. Control your private keys, not your exchange account. And they are right. If you have knowledge, discipline, and enough resources, you can protect yourself. But that is not freedom for everyone. Only survival for a few. Normal users don't want to manage private keys or memorize long recovery phrases. They want safety, not absolute sovereignty. And here, the dream begins to fracture. Without protection, freedom cannot liberate the masses. It only isolates them. Meanwhile, the gap between Bitcoin and the rest of crypto has never been clearer. Bitcoin remains the most decentralized and secure network in history, but it is surrounded by countless projects copying its language without sharing its core values or integrity. As Bitcoin rises, a new generation of coins emerges, numbering in the thousands. Each promises faster transactions, new blockchains, decentralized finance, the virtual world of the metaverse, and NFT collections. The movement quickly turns into a frenzy since crypto's birth, and with it comes chaos in perception. Thousands of coins promise wealth or a revolution, but most disappear within a year, and each failure damages Bitcoin's reputation. For ordinary people, it all seems the same, a mess of scams, hype, and price volatility. But in reality, they are very different. Bitcoin was created as digital gold, slow, scarce, and tamper-proof. Meanwhile, the rest of crypto built an entire casino around it. And like all casinos, the house always wins. But the problem is not just fraud or greed. It's also the so-called system, or rather, the absence of a system. By 2020, regulators around the world still cannot agree on how to handle digital assets. Some countries ban them outright. Others tax heavily, while some ignore them. There is no international standard for exchange transparency or user protection. And without an arbiter, whales, those with the most assets but invisible, continue to play both sides. This is what makes Bitcoin such an intriguing paradox. It removed the gatekeepers, but not power. It only reshaped it. Instead of central banks, we now have concentrated holders. Instead of policymakers, we have influencers. Instead of oversight, we have algorithms. It's still a hierarchical system, just rebranded as decentralized. The truth is, Bitcoin achieved something extraordinary. It proved money can exist without a nation behind it. It shows that trust can be built on mathematics, not institutions. This was the first rebellion against financial monopoly that actually succeeded, and it proved that. But every rebellion faces the same question. What happens after you win? Freedom without structure gradually turns into chaos, and chaos ultimately demands new rulers. Bitcoin has survived all criticism, speculative bubbles, price crashes, and imitators. But its greatest challenge is not technology, it is ethics. Can a currency exist without law? Can a global market operate without accountability? Can freedom endure when everyone's motivation is self-interest? The answer is still unfolding. Bitcoin doesn't need a government to exist, but society still needs law to function. Without law, power simply moves from parliaments to protocols, from banks to whales, and from regulation to code. Perhaps that is why Bitcoin's true legacy is not finance, but philosophy. It forces us to ask what money really is, and whether we can separate it from power. Because even in a stateless world, power does not vanish, it just finds a new address. If this journey makes you see Bitcoin or the entire monetary world differently, don't stop here. Hit like and subscribe to Knowledge Station to explore the silent forces shaping our financial future.